Hey everybody, Jeremy here coming at you Sunday, July 9th for the market bias update weekly report. Looking at the S&P 500 futures here after opening bell Sunday afternoon. Right now we are in a pinch between the 9 EMA and the 20 EMA, SMA, simple moving average on the daily chart. We need to see this resolve one way or the other before we can form a very strong opinion. If this breaks back up above the 9 EMA, I will get more interested for the bulls. But honestly, I am reading this chart as a slowing momentum, a loss of momentum right now. Nothing has broken in terms of uptrend. We still have higher pivot lows. We had barely a higher pivot high here, so the trend is still technically intact. But I'm kind of looking at this as a potential double top. If this breaks down and closes below the 20 SMA here on the daily chart, I'm going to be a bit concerned. I also am seeing the MACD moving average convergence divergence graph is rolled over now, and it is showing a bearish lean. And if we kick this out to a weekly chart, it shouldn't come as any surprise to anybody that I might have a slight bearish lean here. We've seen a lot of volatility increase and come in here at the top end of the chart after an exponential move higher. It's been doing an okay job digesting that at the top end here, but we still have a bit of distance between the weekly 9 EMA. And if this breaks that 20 SMA on the daily chart, the blue line that I was just pointing at, before I went out to the weekly chart here, that kind of lines up with about 43.70 right in here, right to the rising 9 EMA. And I am kind of calling right now my shot. I am leaning a little bit bullish on the S&P 500, and I will show you why. So that weekly chart was overextended, showing a little bit of volatility and weakness. Right now, like I said, we're getting pinched between the 9 and 20. But if we go into an intraday chart here, now you can see that we have this big double top. We're within this range. And the bearish lean that I'm seeing is mostly because we had this big ramp up by the bulls trying to regain some traction on Friday. And going into the closing bell, no one wanted to hold that position going into the weekend. That tells me that people were looking to decrease risk going into the weekend significantly, and it drove prices all the way back down to where they opened previously at the start of that session. No one wanted to hold that position going into the weekend. That tells me there might be a little bit of a bearish lean here, at least down into that 43.70 line, which actually coincides with the previous pivot low here. If we do get that, we're going to need to look to see if support forms, or if we break that, that could actually spell a intermediate term downtrend. If that breaks here at 43.70, I would then be targeting basically this previous support from back in this region, or just a little bit above 4,300, maybe 43.15, let's call it. And that's probably about where this rising 50-period moving average would be as well. So the bulls have some work cut out for them here if they are going to reclaim some momentum. It looks to me like this shot that we have had really going back since like February or March might be coming to an end, and we might be seeing some price depreciation here. So I'm not going to be very anxious to jump in and play anything to the upside. If anything, I'm going to be looking to take profit on positions I have to reduce my overall exposure to the market. And then waiting for whatever pullbacks develop to look for more opportunity after the next week or two. I'm probably going to be very, very conservative this week. I don't like adding new positions when we've had such a big run up in the marketplace. The risk to reward just does not justify it. So I'm going to be very, very cautious going into this week. Looking out to the NASDAQ, actually a fairly similar story. You'll see the same compression pattern here. And if I zoom in a little bit on this, you can see we're also pinched between this 9-period moving average and the rising 20. If this does break to the upside, there might be some interesting day trades or something like that. But again, I am not very interested at buying at the top of a chart after such a massive run. And if we drop this out to a weekly chart, you can see that it's kind of high based here, but we have some room down to about 14,855, back down to the rising 9. And honestly, if we get to that rising 9, I'm probably going to have a bearish lean all the way back down to around 14,000. So I see some potential profit taking, some potential weakness in the charts here. And I think we have gotten ahead of ourselves for the bullish case right now, and we need to see this cool off. This is also going to be going into potentially 2 more rate hikes by the Federal Reserve. People were expecting maybe a little bit of an elongated pause before this last week, and then we got some economic news out that said that was not the case. And actually, let's look at that really quick, because this is very interesting. It's a good teaching moment. Let's go to the 4-hour chart and go back to Wednesday here. So this sell-off that occurred from Wednesday morning on through till Thursday, and then again coming back down to that same level on Friday, this was all basically because we got strong economic data showing that the US economy was actually in much better shape than economists had thought. And you'd think that that would be a good thing for the market. But actually, it is one of those scenarios where good news is actually bad news. Because it means that the Federal Reserve has more ammunition to say, hey, let's continue to raise rates higher. And the market, instead of taking it as a good news that the economy is strong, they take it as bad news, because that gives the Federal Reserve more room to raise interest rates, which will then dampen the stock market and slow the economy. So that was what happened here on 7/5 and 7/6. That's when we got that economic data that was released and drove prices back down and brought this volatility back into the top end of the chart. So going out to the Russell, Russell is now kind of trading in this big choppy range here. It's really, really hard to get a read one way or the other here. If anything, I would say we are just kind of in a neutral chop. I'm not interested in playing this chart at all until we either break back above about 1925 or breaking down below the previous support here, about 1825. So we have about a 100-point range here that I'm just not going to be interested in playing anything on the Russell 2000. Finally, for our major indexes, let's go out to the Dow Jones. This is a weekly chart still. Dow Jones held up a little bit better than the rest of the indexes, simply because it has the big blue chip stocks, the big dividend paying stocks. But again, there's nothing really to see here. It's hard for me to see a real breakout on strength occurring above this 35,000 level. So in my mind, the best case scenario is some sideways action and maybe even a pullback back down to about 33,000 to retest this 50-period moving average and this rising diagonal support. So I see some weakness in the chart here on the Dow Jones as well. Let's take a look at Bitcoin real quick. We had a chance here. I'm going to remove all these drawings, get those out of our way, so we can see the chart a little bit clearer. There we go. We had a chance to break out several days in a row here, tested the high end of the range, just couldn't get it. And now we are actually rolling over and threatening to break the 9 EMA and actually coinciding with the lower end of this support channel as well here. If that breaks, next stop will be down to the rising 20 SMA. If that breaks, we might be seeing all the way back down to about 28,250, somewhere in there. That would not shock me at all. So this trade is off the radar for me as of now. Going out to crude light, if the chart will load, there it is. We've been kind of in this choppy mess. We are still in this choppy mess. The one thing that I do like about this chart is that we are back above all of the moving averages here. We had a cluster of moving averages, the 9 EMA and the 20 and 50 SMAs have been acting as kind of a loose resistance for a while now, especially this 50 period moving average. You can see tested 1, 2, 3 times right there, 4 times here ever since it broke back down below. We are now back above that. So the next retracement we are hoping is going to stick the landing and actually find support somewhere around 71, 75. If we do find support there, if we get a little base, a little consolidation, and then a break higher, I might be intrigued by some crude light plays this week. But honestly, that probably has a little bit of time to develop. It'll be later this week, or maybe even going into the following week, before I feel like this trade is set up and ready to rock and roll. Going out to gold. Gold is actually starting to clean up and look a little interesting here. A break above 1947. I think we have a window to play back up into the decreasing 50 period moving average around 1972. I don't know if I'm convinced enough to pull the trigger on a trade with that, other than maybe a day trade if it cleans itself up. We'll see. There is a fairly nice trigger there between 1943 and let's just say 50. So there is a little window there that we could potentially trigger in with a tight stop and see some kind of a day trade that we might be able to bleed into a swing trade. But usually gold is not a swing trading instrument for me. Honestly, I would like to see this just chop sideways between this 20 period moving average and the rising 200 period moving average in gray here for another week, maybe even another 2 weeks before making a decision. So I need some more consolidation here before I'm going to be interested in that. Going out to copper, nothing to really see here. We're kind of in the middle of the range here between the decreasing diagonal resistance and increasing diagonal support. Nothing really to see there. Natural gas going out, continuing to see this bottoming pattern develop. I might be intrigued with a break back above the 9 period moving average. I would want to see a strong close above the 9 EMA and probably back above the high of this previous red candle, which correlates to about $2.68. If we get a close above that, I might play something with a tight intraday trigger and a tight intraday stop, looking for a push back up into the 2.9 range. But this needs to clean itself up a little bit, probably has a few more days to develop before we'll see that. And if it breaks back down below the 50 period moving average here around $2.51, that will nullify that pattern, and it's all bets are off from there. So last but not least, let's go to our market internals real quick. Our AR high-low, we have been dancing around this neutral zone. We got a couple of days of bullish action. And then last week, Wednesday, Thursday, Friday, we had kind of neutral leaning slightly bearish. If we get another close down here below the -50 mark, that is going to cement my lean to the downside here for the next couple of weeks. So watching to see that, and that will be kind of a secondary confirmation to the downside, to more profit taking to come. And then looking at our advancing issues, declining issues, this one we did actually have a decent pop on Friday, pulled back a little bit. Hard to get a solid read on this, but we are going to be looking mostly at what it does Monday and Tuesday. I think that will be the determining factor on which way this chart leans for us. Right now, honestly, I'm not seeing anything in this in terms of the moving averages or the pop here on Friday to give me a solid read on the advancing issues, declining issues for this week. Finally, wrapping it up, let's just go out and look at economic data ahead. We're on forexfactory.com looking at their economic calendar. Nothing on Monday and Tuesday, so we're clear from all major economic news events Monday and Tuesday, so that's great to go into the week and hopefully let the market get its footing again. Wednesday, we have CPI data. Thursday, we have core PPI data. Both of those will be important. And then the preliminary consumer sentiment report on Friday. It is expected to have a slight beat. I think it's probably going to come in around the previous report. I don't think we're going to get much of a beat, actually. I think we're probably going to be coming in somewhere around that 64.4, 64.5. But either way, I don't see this being a market mover nearly as much as the CPI or PPI on Wednesday and Thursday. So keep that on your radar for the week ahead. Hope that helps, guys. Enjoy your trading week. As always, let me know if you have any questions or if I can be of support in any way.